Good morning, traders. Welcome to the live stream. My name is Charles. I come from a community called Pirate Traders, where we are focused on the ES, the NQ, and how they move through the two-way auction process. Thank you so much for joining me this morning. What we're going to talk about is what is likely to happen today with the market, and we're going to use purely technical signals to tell us what's going on. The way that I look at the market, when I say that I look at it as an auction process, is essentially that there's only one thing that makes a market move, and that is buyers or sellers stepping in. If you have more buyers, the market moves up. If you have more sellers, the market moves down. Everything is supply and demand. Okay? When you spend too much time focusing on things outside of supply and demand, you get a lot of misinformation, a lot of confusing signals. Whereas if you focus purely on supply and demand, if you focus purely on are there buyers or sellers in the market, then the information is reliable much more often. Okay? A much higher percentage of the time. So what do I mean by that? Well, fundamentally, war is happening, right? In multiple places all over the world. You know, there's trade tensions with China, and there's this and there's that, and there's so many reasons why the market should be crashing and should be going much lower. But what happened over the weekend? The market went much lower and then did what? It came right back up to where we were yesterday. As a matter of fact, we're still, 30 minutes away from the market open, but it looks like we're going to open above where we closed on Friday. So even after this terrible news of, America attacking Iran, the market still has buyers. Look, they bought. There is supply. There is demand for that supply. The market liquidates and the demand steps in and buys it on up. So as of right now, we don't want to be that bearish this morning purely because of what might be happening in a fundamental world. We want to stay focused on the actual charts and the information that they give us. Okay? So to start off, I'm just going to zoom out a little bit. We're going to start by taking a look at the monthly charts, then the weekly, then the daily, to see if any of those can give us some insights that we might use to carry forward. Okay, well, first off, looking at the monthly chart is one time framing higher, and we have not reached the target for that momentum, that one time framing, which is previous all-time highs. So this isn't super helpful at the moment because the market could basically go either way. It could come all the way back down towards 5,600 and still be one time framing higher. And the fact that we haven't gotten to the all-time highs does not mean we have to go there today. So the monthly chart looks bullish, but it could go either way. It's not super helpful. Let's zoom in and we'll take a look at the weekly. Okay, on the weekly, we can see that the momentum is running out, right? When we look at the weekly chart, we had multiple weeks of the market making higher highs and higher lows again and again, but we have two very big wicks at the high of the last few weeks. And so far, this weekly candle, because it includes yesterday's overnight trade, has already made a lower low. That is a sign. So the wicks on the top are a sign that the momentum is running out. The lower low is a confirmation that the momentum is out. So that makes it less likely that we're heading to those all-time highs, at least this week anyway. Okay, so that's slightly bearish to see. Let's now zoom in and take a look at the daily. On the daily chart, we have been monitoring for like a month now this channel that the market is in. We haven't been monitoring it for a month, but we've been in this channel for a month, okay? And this is basically supply and demand. Buyers bought, pushed the market as high as they could, and then sellers sold. Pushed the market as low as they could, as high as they could, as low as they could, as high as they could, as low as they could, as high as they could, as low as they could. As long as we remain in this channel, this is a form of balance. It means the market isn't really going anywhere. It's just going to keep bouncing up towards the upper end of the channel and then bouncing down towards the lower end and back up and back down and back up and back down. Once again, over the weekend, we dipped below there, which was bearish at the time that it happened. But now we've retraced back into balance, which is actually bullish. That is what we call a look below and fail of a balance area low, which increases the odds we're heading up to the balance area high. So the long and the short of everything I just said is there's no real edge right now. This market could go up or down It's 50-50, and we literally have no idea which way it's going to go. So let's zoom in and start taking a look at the market profile and the book map to give us some insights about what might be happening. Is it going to go up or down? So the first thing I'm looking at is, where did the market spend most of the time and bring in most of the volume on Friday? In here. Okay. We dipped below there. Now we're back up in there. So at this moment, when we open, we're basically at a fair price to do business. We are basically at a location where market participants can feel comfortable buying and selling. They don't need to be fearful inside this range, whether they are a bull or a bear. But if we start to get outside of that range, they're going to start to change their minds. People that were shorting, so this was the opening price on Friday. The fact that we closed down here told us a majority of the participants were short. Those people will start to change their minds and not want to be short anymore if we start to get above this area right here. Okay? So to me, the way I see the market this morning is what we call a chop zone, meaning if we're inside this yellow box right here, the market could go anywhere. Okay. It could go up. It could go down. It could reverse. It could look like it's trending, but then completely reverse. It can go nowhere and just sit grinding in one place. Anything can happen inside this chop zone. But if we start to get above this chop zone and we get new buying, we are going to squeeze any of the shorts from Friday. And if there are any shorts left from the weekend, the people that are selling up here, we're going to squeeze them as well. That could easily catapult us back up towards the 60-65s. Okay. If the market comes down here towards the overnight or towards yesterday's low around 6,000 and it gets new selling down there, that could easily create a lot of momentum down, right? People see how far the overnight went. Let me zoom out a touch here. People see that in the overnight, they went all the way down to 59.59. So if they start to see new selling below 6,000, that's a potential 50-point move that they could be part of. So they're going to want to short. So outside of this chop zone, there is a lot of potential. Okay? The potential to the upside is squeezing sellers from last week and from the weekend. And the move lower is FOMO sellers, and squeezing buyers, taking the market lower. So there is an excellent opportunity this morning for a big move one way or the other. The point that I'm trying to make is, until that opening bell rings and we see how the market, after the open, digests this information, we don't know which way it's going to go. And I would say it's about 50-50 up or down. So when the market opens inside that chop zone, I'm just going to be monitoring what is the market doing. Are support levels holding? Are resistance levels holding? If, for example, we're blowing through support levels with no problem, blowing through resistance levels with no problem to the upside, well, then we have momentum up. If we're blowing through support levels to the downside, we have momentum down. And then let's say we have a support level. Like right now, support that's jumping out at me is this area right here, around 60.13. Okay, this was a large node of volume on Friday. It was a large node of volume over the weekend. It was support on Friday. It looked like they had some tug of war there over the weekend. So this is a great place for the market to find buyers once it pokes back down. So let's say it bounces there. Okay, great. Well, that's a little bit bullish to see. What happens at resistance? Does it have to come all the way back up and find new resistance up here? Or does it immediately get smacked back down? The immediate smackdown is a sign of momentum down. The lack of is a sign of balance. So inside the chop zone, I will just be monitoring what is happening to try to give me an idea of which way is the momentum. Are we bringing in new sellers that want to take the market lower, or are we bringing in buyers who see this as a dip, see this as an opportunity to get long? Which of the two is happening? Okay. Any questions on any of that from the chat? If you are watching this in the Discord, feel free to write your comments or questions in the Futures-Charles tab in the Discord. I can see Trader is there. Good morning to you. Welcome. As far as the YouTube it goes, we've only had 3 people leave a comment. 3 people. Good morning to Billy K, Sheena, and Trevor. Welcome, welcome. If you guys have any questions for me, please let me know. Also, if you would not mind, a quick little thumbs up, a quick little smashing of the like button can really go a long way to help out bringing in some new people to come hang out. I sent out a survey to my subscribers this weekend. And one of the questions in the survey was, what is your experience level with trading? How long have you been trading? And I was shocked to find out that almost half my audience has been trading for 10 plus years. That was so impressive to me because that shows me that this community, this Bookmap community, which is driving a lot of the people to my channel, is solid, experienced, hardworking and successful traders. That is the type of community that we want. That is the type of community that we want to grow. So let's smash that like button and let's get some more of these old timers up in here to share their advice so we can all grow together. Methinks that's a good idea. Good morning to Olive, Francisco, Gills, Rich, and Tom. He says, oh, all right. Comment. Oh, all right is a comment. So I'll take it. Does anybody have any questions about the TA, about the markets, anything they want me to talk about? I'm sure you're all going to ask about Bitcoin because I predicted the sell-off on this very stream last Monday. And so you guys are probably like, WTF, mate? How did you know it was going to happen? Of course I didn't. But what we were talking about was the fact that the market was in balance and that because we had failed to take that market higher, the highest probability was that we were coming back down towards that balance area low, which I put at, 101,000. Okay. So we did it. We made it to the balance area low. Today is going to be a very important day for the corn. Okay. If this Bitcoin wants to bounce up and out of here, this is their chance. Just like the ES last night. What were we just talking about with that trend, with that channel on the ES? The fact that they poked below it and failed and came back in is actually bullish because now it gives us a chance to squeeze all the sellers who were selling last week, and that takes the market back up to the opposite end. So again, we won't really know because this happened in the overnight until the regular trading hours opens in 15 minutes. Then we're going to find out whether we really did look below and fail. But the Bitcoin is a 24-hour market. So they did it. They looked below the balance area low, and they're now right back at it. So that tells us we're probably going to spend some time grinding around here, probably a couple of days, where the market is going to kind of grind and chop in here. Okay? Trying to decide which way it wants to go. Look at how much time we spent up here. 3 days, 2 days, 3 days. Down here, 2 days. Came back a couple days later for one more test. Here, 2 days. So expect something like that with the corn, where we're grinding around 100,000 for a couple of days here. But if they break higher, that can slingshot us back up to 110. Okay. So Bitcoin really needs to bring in some buyers here and hold this up. Now, if you're going to ask me why did it happen, I'll give you my guess. My guess is because they released the news that legally, any stable coin that wants to be tethered to the US dollar will have to use short-term treasuries as a way to hold the cash for that. And I believe a lot of these coins, particularly Tether, is completely fake. And so they won't have the money to buy the securities that they have to buy from the government legally. And so what are they doing? They're selling digital assets to try to bring in some US dollars so that they can have the money to cover their reserves. So I don't think that this is purely a technical move to the low. I think this has to do with that news. So there's really no way to know how that will play out. And the good part is it's going to be big one way or the other. They're either going to reverse Bitcoin back up from here, in which case no worries and everything's bullish once again. Or if it starts to fail, it's going to fail. And we're coming back down to the 70s, the 80s and 70s. Okay. Which if you're a trader is an excellent opportunity. You can short the coin. Coinbase has futures contracts. You can short the coin if you want, or you could buy the dip, which is another great opportunity, depending on how you see things. We'll take a look at NQ. I have a feeling it's basically doing the exact same thing as the ES. Yes, sir. So it has been balancing with channel exactly the same way the ES has been. And last night it looked below and failed that channel. So both the ES and the NQ are in the same place this morning. 50-50 chance of up or down. And we will have to see where they break to get those specific insights. As far as a chop zone for the NQ, as far as the specific levels I would watch this morning, let me tell you now. So I would call the chop zone this area right here. So you're talking 21,930 down to 21,800. That area is your chop zone. Let them go sideways. Let them flip and reverse and trick each other and try to break and fail and do whatever they need to do in here. But new buying support above 21,930 is bullish to start to retrace the single prints from yesterday. So that could get you up to 22,013 and even honestly as far as 22,040. Okay. And new selling below 21,790 is going to take you down. First stop would be 21,750 and then all the way down to 21,710 pretty easily. So that is your chop zone on the Q. Good luck to you. Shoobity doobity doo. Frito says, my comment is that I'm taking the trading day off because my ISP says they'll be doing work today. So I picked up a shift at work. Now I don't have to run my AC all day. All right. Well, thanks for stopping by and letting us know, Frito. Cheers, brother. Ashwin is here. Good morning to you. DNK in the house. Jay, could we analyze the SPX? Well, the SPX is doing the exact same thing as the futures. Okay. But if you want me to point out some levels, let me take a look. Yeah, the SPX looks way more bearish than the ES does because it's not including that overnight range. Again, you can watch the futures to see what's going to happen with the SPX here. But to me, this is your balance area. And we're opening right on that balance area low. So if the market gets below pretty much where it is now, let's say 96.60, you're looking for further downside continuation with any new selling there. If not, if it opens and it starts to push back up, you're looking for the market to get back up to, let me zoom in a hair here. Yeah, so if you get support this morning and the market starts to get buying momentum, you're looking to move up to basically 6,009, even potentially like 6,020 with a lot of new buying today. But again, if I was trading SPX, I'd be watching the futures to see how they react when the market opens in 9 minutes. That's where you'll see the price action easier to read. Sheena says, is it oversimplistic to say that balance equals non-trending market and trending is out of balance? Sheena, not only is it overly simple, it's my entire way of making money. You just nailed it. Yes. When the market is in balance on a higher time frame. So it depends what time frame you work on, right? If you're a scalper, you're looking at balance on an hourly time frame. You're like, are we going sideways over the next hour, right? That's what you're paying attention to. If you're a day trader, right, who's in and out of trades within a day, you're wondering what's happening on a daily time frame, right? Like are we in balance or do we have momentum? And when they change is when the best opportunities exist. So for example, looking at this channel that we've been talking about on the ES, okay, as intraday traders, we want to pay attention to this channel. Okay, we want to be super focused on this channel because if we get to the lower end of the channel and we don't keep going, we don't get new selling in the days ahead until we get to the upper end of the channel, the market is likely to move up to the opposite end of the channel. But is it likely to be a big, strong, crazy trend day where the market just goes in one direction all day long? No, of course not. Right? It is more likely to be a bell-shaped curve that breaks higher, or the market starts moving a direction and then becomes a bell-shaped curve, right? So that's like what we had on Friday. If you look at the market profile from Friday, the market didn't just trend lower all day long. It made one massive move down and then it just went sideways all day. Look at the day before that, bell-shaped curve. Look at the day before that. Bell-shaped curve up here that broke lower and then became a bell-shaped curve down here. So even though we do have momentum in terms of the market making, lower highs and lower lows, it's a balancey type of momentum, isn't it? As an intraday trader, it's doing a lot of sideways. And it's very frustrating because you're like, I know where you're going, dude. I saw that you couldn't get above the balance area high. I know you're going to the balance area low, but geez Louise. It's spending 4 hours doing nothing and then making a big move. Or it's spending all day just reversing itself over and over and over again, right? That's what you get when the market's in balance. Intraday, you get a very, very balancy, choppy market when the market is in balance. Now, let's say you get to the end and you break out. So let's say today we were to push below this channel's low, come back up and turn it into resistance. That's very important. You got to turn it into resistance. Well, then the balance is over. And at that point, we have momentum. And what can we expect if we have momentum? We can expect days where the market just pushes down for hours and hours and hours and hours, and it just keeps going. Because we have momentum down on the daily, we're more likely to get reliable momentum down intraday on those days. So you can see this by looking at the charts, by zooming out and looking at the charts. When you have a balance area and you break, you get much bigger, faster moves. When you start balancing, you start overlapping yourself over and over and over again intraday. Then when you break out of that, you get big moves. Then you start overlapping each other. So understanding what you are on a daily time frame helps you to understand what you're doing minute by minute throughout the day. And I would say, Sheena, I must be rubbing off on you. It's working. All right, so we are 5 minutes from the market open. We are right near what I would call the chop zone high. So that increases the odds in my mind we will get up there and fail and come back down. But we will have to wait and see what happens once the market opens. I do not know how to say this name. Chindazvito. Good morning to you and welcome in the Discord. He says the yellow volume profile on the left is accumulated over 1 month. It is not 1 month. It is like all the data at this price level previously. So I think I have about a year's worth of data in there right now. But what I do is I look at the chart and I figure out how far back do I have to go if this is where the market is trading, how far back do I have to go to see what happened when we were trading in here before? So if I have to go back a year, I go back a year. If I have to go back 2 years, I go back 2 years. So if the market were to sell off down to here, I'd be adding a lot more data, which of course my computer loves when I do that. Jason says it's toasty out, Frito. Yes, it's warm. It's a warm summer. Crypto Writer says I didn't get the email over the weekend for the survey. If you got the daily email this morning with the links to join this, there's a link to still take the survey below there. And I would love to hear what you have to say. Guillermo in the house. Good morning to you. DNK says, what are the percentages for the pink and purple volume on your market profile chart? That is a great question. So if you look here at the profile from Friday's range, the pink is the top 30% of volume. Or sorry, the red is the top 30% of the volume, the darkest color. The pink is the middle 40% of the volume, and the white is the lowest 30% of the volume. For the overnight range, it's the dark blue is the top 30, the light blue is the middle 40, and the white is the bottom 30. We are 2 minutes from the market open. This is going to be a good one, you guys. I'm excited. There's opportunities today. Everyone was bearish on Friday, and then bad news happened. So either those bears get to enjoy a market moving lower today, or they get squeezed. Zach says, when is the market most likely to tell us today whether it's going to go up or down? Is today a hard day? So today will be a hard day in terms of patience, but not in terms of reading the chart. Okay. Like I said, a majority of the traders are short. So if we get up here to this area around the overnight high and we get new buying up there, we start to get support. That is a sign we're going to squeeze all the sellers from last week. Okay, so just forget everything I just said and think about it like this. If we get new buying this morning, we're going up. We're going to do this again. Okay, we're going to do this again. If we get new buying this morning, we will see that new buying if we get support at those overnight highs. That's how we'll know it's new buying. So it's not going to be complicated to understand what's happening. If we get that new buying, we expect the market to go up. But also, if the market gets that new selling at the chop zone low, we expect the market will make a big move to the downside. Why? Because everyone knows it can. Look at how far down it went last night, right? So if everyone knows it can go that far down and we get down here towards yesterday's low and we start to get new selling down there, where do you think those sellers are looking to take profits? They're not going to take profits right here. They're not going to take profits right here. They're trying to get all the way down there to that overnight low. So if you get new buying up here purely through squeezing the shorts, you can get a big move up. If you get new selling down here, the FOMO, the excitement at the amount of money to be made to the downside could get a lot of momentum lower. The hard part will be not fucking it up when you get to the upper or lower edge, right? Reading it properly, recognizing if it's new buying or selling, and then entering the trade at a good location, right? That's going to be the hard part today. And that may happen right now within the first 30 minutes. So let's take a look. Take a look. It's in a chart. Trading ES. Trading ES. I'm watching stops and icebergs here. They squeeze some folks. Will there be more? Trading ES. So when we look at the book map right now, what are we seeing? Yeah, we just dipped from the opening price. We came down, but it was for stops. So now we want to see if there's new sellers that start to pile on here. If there's going to be new sellers, we will see icebergs popping up, red icebergs showing new sellers. We will also start to see liquidity popping up down here to become a target to get to. Trading ES. It's too early now. Shut up, Charles. Don't sing a song. We're half awake now. All right, so we are pushing into some support here around 60.12. Looking for a bounce. Again, inside the chop zone, we're just monitoring what happens. Does support levels get bounces? If they do, how far does the market have to go to find resistance? If we bounce here at 12, do we immediately get new selling? Or are we able to work our way back up towards the opening price to find those sellers? Let's see what happens. Or do we not get any support at all? This is what will help to build the narrative in our mind that we're going to use to carry forward for the rest of the day. But Charles, if the market's going lower, I have to be short right now. Really? You have to be short right now? You can't wait until you're confident that the market's going way lower today and then you get short? You, my friend, are a gambler. Okay, so we got a little bounce, but immediately got some new selling. That is bearish to see. Okay, so now we're looking for the halfback right here at 60.19 to become resistance. We already pushed down. We took out some stops and got new sellers. So that tells us there's momentum to the downside. The confirmation will be if they can hold the halfback at resistance. If they can hold that halfback, they're going to try to break the chop zone low. So moment of truth for the sellers. Are they about to take control? Or will the chop continue? Looking for resistance, 60.19. Okay, no resistance means, you guessed it, folks, more chop, more sideways, more grind. Bum ba da bum bum bum. Bum ba dum. Okay, so now that the market has made its way back to the opening price, 60.25, we are fixing to squeeze all these sellers that were just selling the low. And so that should get us up towards the 60.30s. We will look for resistance there. 60.30 and 60.35 are the areas of interest for me. And again, we're just going to keep playing this game because we know we're going to chop inside this chop zone. So we're now watching to see how well resistance holds compared to how well support held, right? Knapp says we got some numbers at 9:45 and 10 a.m. We will look out for volatility there. Okay, so we just repaired a weak reference we had left behind from yesterday. That takes away the magnet to the upside. We also got back to the VWAP. So this is an opportunity for sellers to start to pile on. Does the resistance at 60.30 hold? Okay, haven't found that resistance yet. Still bringing in buyers. Okay, we're getting bad taper here at the high, so the market needs one more poke up. Still has not found those sellers. So you say, Charles, what the heck do you mean found those sellers? What does that mean? Well, there's two people that could go short right now. The first are buyers that are looking to take profits, right? If you got long at some point this morning, you're probably wondering, where do I lock in those profits? Seeing the previous resistance in here tells you this is probably a good place to start locking in some profits. So that turns a buyer into a seller to get out of their long. You also have people that want to get short. They didn't want to FOMO in at the low. If they had, the market would have kept going lower. We would have gotten new sellers there and continued lower. So they weren't ready to short down there. Maybe when they come back and they see these previous resistance levels, they decide to start entering shorts. So we're looking for that to happen. We're looking for those buyers to get out of their longs and those sellers start to get into their shorts. If they do, the market will come back down to the halfback again. But we have not found those sellers yet. I think they're coming, though. Dun dun. They're swimming underneath the surface. Dun dun. Dun 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 dun. So right now, order flow is telling us since we started to add this large node of liquidity, you see right here where it started to come in, what has market been doing? Getting pulled into that liquidity. What did they just do? They just moved all that liquidity up a couple points. So they are trying to get that one little pop to the upside here. They want to poke into the 34, 35 area to see if they're sellers. That's what the market has to do. This is the type of stuff you always want to pay attention to if you have Bookmap. Right here. When something suddenly changes, oh my God, all this liquidity disappeared and moved up a couple points. You ask yourself, okay, what is the market doing up to this point? Right? The liquidity, what has this liquidity been doing up to this point? Well, it's been acting as a magnet. It's been pulling price to it. So if it's working as a magnet, pulling price to it, and they move it up, what are they trying to do? They're trying to get the market to go up, right? They're trying to create more buyers. They probably want that one final little poke before the reversal. Let's see what happens. It's also no coincidence that we will be right at the chop zone high, right at the time the news drops in 2 minutes. The market loves to be at a chop zone high right at the moment news drops because anything can happen and that news can have a bigger effect. So now as we get closer to 9:45, what are we starting to observe in the order book? It's getting thin, right? Look at all the orders starting to disappear right here. See that? That's all bots, you guys. None of that is real traders predicting whether the market will go up or down. These are all just day trading bots, high frequency bots that just look to squeeze a quick penny here and there all day, every day. Once they disappear, a lot of the liquidity has disappeared, which means the market can go anywhere and do anything. And that's what happens right before the news drops. So if you're ever sitting there and you're trading and all of a sudden the screen goes black like this, squeeze your butt cheek real tight because it's about to move. And it might go nowhere. It might just chop around like this, but it's about to move real fast because the liquidity just got super thin. All those day trading bots just turned off. There it is. The news. There is that poke. You see, we wanted the poke. We wanted to take out the 188 contracts. So now we're looking for what happens when that liquidity returns. It's starting to come back already. What happens when this area over here, the current order book, starts to look like it did? At that point, do we have support or resistance? Then we can trust it for the next move. Olive says news. Yes, correct. Nat mentioned it earlier. PMI. And then we got existing home sales numbers at 10. Also news. ER says, Charles is the frickin' best. You guys need to do his Markets and Mind course. Well, thank you. I'm not teaching any right now. So if you're interested in learning more now, you got to just join the brigade and hang out every day. So I do these live streams like I'm doing right now every single morning for the first hour of trade. So if you're wanting to learn more about how to use Bookmap, how to use Market Profile, I highly recommend you join the brigade. You can see the link in the description above. It's piratetraders.io/join. You go there, you join. It's only $20. And then you get my annoying voice every single morning singing you ridiculous songs and telling you what the market is likely to do next. And then when I do have another workshop coming up, then you should take it for sure. But thank you, ER. Appreciate you. Street Salsa says, I'm a perfectionist. I want every tick. I know that it's a joke, but as a conceptual idea, please don't ever think like that. You don't want every tick. You want trades with a high probability of success, let's say better than 60%, potential to work, where you can get in with very little risk and a much larger reward. Here it is, guys. Here's our moment, right? So here we are at the chop zone high. Either this market's going to bring in new buyers and it's going to make a huge move up, let's say 10, 15, 20, 30 points higher, or it's going to fail. It's going to come up here and it's not going to be able to bring in buyers up here, in which case, guess where it's going to go? Right back down to the lows. So if I'm getting into a trade, a long or a short right here, I can use a tight stop. If I'm going to go long, I'm using a stop inside the chop zone. So my reward is much bigger. I can make a lot more money on the upside than the, 5 points I'm risking. Same thing the other way. If I see it as a look above and fail, if the market seems like it's running out of steam and it's going to come back down, I can get short and I can know I'm risking, 6, 7 points with the potential to make 30, 20 to 30 points. So that's trading, not getting every tick every day, not perfectly guessing the high and the low, knowing that you should just chill out first thing in the morning, let it chop around. And then when the market makes its decision about what it's going to do, then you enter the trade where your reward, if you are right, is significantly larger than your risk if you are wrong. And this is where trading comes from, because the probabilities of either one of these trades working out is like 50-50. Who knows? But if you're right 50% of the time, and when you're right, you make 2 points, and when you're wrong, you lose 1 point, then you will be profitable. You will make more than you lose. So you only have to be right half the time. You don't have to always know. You could be wrong. As long as your rewards are always more than your risk. That is how you become a professional trader. Thinking in probabilities, such as this. Okay, so now that we are at the chop zone high, we are studying the market. Can we bring in new buyers up here? Can we keep this momentum going? Or are we going to taper off like we did on Friday and over the weekend and reverse and come back down? And I will tell you as soon as I feel I have a bias. So just for those of you following along from home, this is what I was talking about when I say the liquidity disappears. When it comes back, we can trust it. We can now trust support and resistance again because the liquidity is back. It's the same as it was before the news, right? Okay, and we are bringing in buyers. That is bullish to see. So that increases the odds. The market needs to head up and test the overnight high around 60.3975, and we will monitor for continuation once we get up there. This is bullish. But Charles, there's war happening. How can it be bullish? Because there's buyers, and that's all that matters. Because if they keep buying, the price is going to go up. That's just what it does. Zach, you're killing me with these questions. He says, on a scale of 0 to 10, how difficult is it to trade the direction of the ES is about to go right now that liquidity has re-entered? Yeah, I can't give you a 0 to 10. It's experience. For me, I can trust, like I said, that the market's going to the overnight high. From there, I need to monitor for continuation. Meaning, to be convinced it's going to keep going beyond, say, 60.42 up to 60.47, I got to see new buying. So I got to see them turn, 60.39 into support. It's not a matter of how hard it is or not. If you know what you're looking for, you're just looking. You're just watching and waiting, It's like asking a baseball player who's standing at the bat about to swing, like, how hard is the next pitch going to be? It's like, I don't know. Like, the pitch will come and I'll either see it as a pitch I should swing at or I won't. I'll take my swing and it'll work or it won't. Predicting ahead of time how hard something will be is not very helpful. Just know what to look for and look for it when you get there. So there's the test of the overnight high. The buyers got here. Can they keep it going? On the idea of easy days versus hard days, meaning there are some days where you can read a chart and it all makes sense and it works out great and your support and resistance levels, get hit and hold and vice versa. On days where it's easy versus days where it's hard, you often don't really know until you're in it. And then all of a sudden you think a support is holding and it breaks. You think that, okay, the support broke, so we have momentum down. So now the resistance should hold, but then the resistance breaks or whatever. Suddenly then you realize, oh, fuck, this is a tough market. This right now to me is not tough. We're at the overnight high. We're bringing in new buyers. I know a majority of the participants were short on Friday, so they're now fixing to get squeezed. And I know that we looked below and failed the balance area on the daily time frame, which we talked about this morning, which increases the odds. I know it sounds nuts, but it increases the odds we're heading up to the upper end of this channel. Okay. And so it's not that hard. I just need to know, do I see the new buyers or not? That's it. And it makes perfect sense. And I know what to look for and I know what my targets are, so today is kind of easy so far. It took some patience to get here. Now, let's say 10 minutes from now, the market comes crashing back down. It just liquidates out of nowhere. It's looking like it's finding support. It's looking like it wants to keep going, but then just out of nowhere, it crashes down. Well, that would suck. That would make this more difficult because all the market generated information is saying it wants to keep going up. And then the opposite happens, which that happens, guys. Markets are random. All the information could say bullish and then randomly it liquidates. That's always possible. And then that would be a tough day, but I can't predict that will happen right now. Right now, I can just take what the market is telling me right now and assume it will play out the way it's telling me it will play out. Take a look. It's on a chart. Trading ES. Trading ES. Street Sauce is a pirate. He thinks you should join the brigade. He thinks everyone watching this right now, all 145 of us, should be hanging out like this every day. We should always do this together because this is awesome. It only costs $20. If you just went long the market at 37, targeting the overnight high at 39, I mean, you just made $100 off of that move. And so you can afford to put 20 of it towards getting this advice every day. That's what I'm saying. That's all I'm saying. Shank says, can you explain who the resistance is there? So it would be sellers I don't know how to explain this, selling the rip. So when somebody wants to go long the market, right, they think the market is going to go up. There's two ways they can do it. They can either go long right now at whatever the price is, or they can wait for the market to dip, right? So let's say somebody wanted to go long right now. They could say to themselves, I don't trust that this support is going to hold right here, which, speaking of which, we're testing support. They need to turn 36 into support and hold it to keep this momentum going. So they might say, I don't trust this support. I'm not going to go long right this minute. But if the market were to dip down to, say, the halfback, the opening price, I could go long there, right? So that's what we call a dip buyer. They don't go long. They don't FOMO in at the high. They wait for the dip. These tend to be a certain type of participant. These tend to be participants that are what we would call smart money, air quotes. You know what I mean? These are the people that are strong hands, air quotes. These are the people that stay in their trades as opposed to get in and get out and get in and get out over and over again, which is what the FOMO traders tend to do. Okay. So the sellers right now at 42 would be strong hand sellers that were not shorting the lows. They were waiting for a rip to sell at a better location. So whether or not we will get those sellers, I do not know, but that's where they should step in if they're going to. So we'll watch for resistance and see if we get it. And if we don't, this market is bullish for the rest of the day. You heard it here first. We have new buyers at the overnight high. That is bullish. And we have not had any real short covering yet. There was a little bit of short covering here at 32, but really it was not much. So there's still sellers from Friday fixing to get squeezed. If this market stays up here, they will change their mind. And that's all I do. I just, where are the buyers? Where are the sellers? What would change their mind? Bossman says, is this a short setup? Not right now. So for me, the momentum is up, so there's no reason to go short at all. Well, there it is. We just squeezed them. Did you guys see it? I friggin' said it and it happened. I love that. I love that when the second I say it, it happens. Okay. So now all these sellers from Friday are capitulating. They're giving up. Right? Friday, the market opened up here and it closed down here. So there had to be a lot of people going short to get it to make that move and stay down here. They had to still be short at the end of the day. Well, now they're like, fuck it. I'm wrong. And that little pop you just saw, that was the first wave of them squeezing out of their trades. So now, if this momentum is going to keep going to the upside, we got to keep bringing in new buyers up here. We got to hold, I would say, just to give it a little bit of breathing room, I would say 37. So 60, 37. As long as we're above there for the rest of the day today, it's bullish. It's going to keep going up because there's still more sellers to squeeze. So they'll keep squeezing. They'll just squeeze them until every last one is squeezed out of the market. Okay. But anyway, to get to the question of, is this a short setup? So you see the market get above the overnight high. You have a resistance level and you're asking yourself, should I go short there? The answer is no. In this case, the short setup would have been the failure at support. So like I just said, anything above 38 to me now is bullish. Any new business that happens up here increases the odds we're going to keep going up. Okay. But what happens if that doesn't hold as support? What happens if the market comes down here and it crosses through 38? And even worse than it just crossing through 38, what if it comes back up and turns that into resistance? Guess who's fixing to get squeezed? The guy going long right now, right? So that would be the place to go short. Once the support level, which is 38, breaks and becomes resistance, that's the short setup. And you know it'll make a move because you got lots of people going long up here, fixing to get squeezed. Squeezy, squeezed. Okay, so I am bullish on the market. I think we got further upside continuation, we've got to hold this overnight high. So like I said, any area above 37, it could be 43 that becomes support. It could be 40 that becomes support, or it might be 37 that becomes support. But anything above there, above this little node right here, is bullish. That node breaking and becoming resistance is bearish. Put the line in the sand. As far as bigger picture, the market is concerned, do not forget about this channel. Okay? If you have not drawn this on your chart, it is worth drawing. If today's market, and again, we got hours to go before the close. If today's market closes and it's still inside the channel, the highest probability this week is that we are heading back up towards that upper end. And it doesn't matter what's happening in the news. Forget that. Okay? What matters is the liquidity. If the sellers are getting squeezed, the people that went short on Wednesday, the people went short on Thursday, the people went short on Friday, if they all change their minds, the price can move up to this channel high. Period. Doesn't matter what's happening with the news. If we can turn last week's sellers into buyers, this thing can make a move to the upside. The last thing that would be sort of the final confirmation that we are doing that is if we can get above yesterday's high today. We don't even have to close above it. If we can just get the market to poke above yesterday's high, it significantly increases the odds that we're heading for that balance area high over the next few days. Okay. With that, I must say goodbye. Unfortunately, I am chewing into Bruce's time. If you are not a member of the Pirate Traders Brigade, why are you not a member? Come hang out. Like, it's so much fun. If you don't want to, for whatever reason, go hang out with Bruce. He's awesome. He's got lots of great information, and he is streaming right now. If you are a member of the brigade, let's set sail. I'll see you in the stream in about 5 minutes. Thanks a lot, everyone. Have a great rest of your day and a great week. Goodbye.